So now we are ready to actually dig into the financial statements. And the very first financial statement that we are going to dig into is the income statement. So the main question is, what is the purpose of the income statement? Well, first of all, it shows all the revenues and expenses of the company over a period of time. Now, that might seem kind of intuitive, but that will actually change in just a second when we talk about the balance sheet. But the income statement, we get to see how much revenue and expenses we had or incurred from a set period of time. So during January 1st through December 31st, or during the first quarter of the year, or whatever. The second purpose of the income statement is to show you the profitability of the company. But remember what we were telling you earlier when we were going through the accounting boot camp, that net income doesn't tell you the whole story of a company's profitability. Now, there are ways to figure out the company's true profitability, and we'll teach you that in just a little bit, but just understand that net income doesn't tell you the full story of profitability. Now, why that is because there are non-cash items baked into net income. Remember that we have non-cash items like depreciation that are in net income that lower net income more than it should be lowered. So just realize that net income in the income statement, it does show you the profitability of a company, but it doesn't tell you the whole story. Now, on that same train of thought, due to accrual accounting and one-off expenses and income, net income might be over or understated. And that's kind of going back to what I was just talking about. So that is the purpose of the income statement, is basically to show you the expenses and revenues over a period of time. Nothing too crazy. So let's go ahead and talk about the actual components of the income statement. So on the income statement, the very top, we always have revenue. Revenue is just the money that we received from the sale of goods or services, right? That's nothing too complicated. We can also call that sales, or some companies call it net sales or sales revenue. But whatever it is, it's the very, very first item on the income statement. It's how much money did we make? And usually a company will not break out that revenue number too much. If it's a public company, they have to break it out, and they might break it into segments. So let's say you're Google, you might break out your revenue by advertising revenue and other type of revenue that they receive. But most of the time, revenue is just one line item, and that's all you see. You earn revenue of X thousands or millions of dollars. Now, below revenue, we have something called cost of goods sold. Or some people call it cost of services, or some other type of iteration. But in general, it's called cost of goods sold. We refer to it simply as COGS. So like your cog in a wheel, COGS. So cost of goods sold. Well, that's the cost to produce the good that you're selling. So let's say that you are making a car. Well, the revenue would be all the revenue that you make from selling the car. And the cost of goods sold would be the price to buy the metal and the cloth and the cushions and the wheels and everything else to assemble and make the car. So that's what the cost of goods sold is. It's how much it costs to produce the good being sold. Now, in today's economy, there are more and more service companies and technology companies, and they don't really have a cost of goods sold. They don't really have to produce a car or a physical product. But they still have costs associated with the revenue that they're making. So I'm going to quickly go back to Snapchat's financial statements, and we can see that they have revenue of $149 million for the first 3 months of the year. And then they have cost of revenue. That's cost of goods sold, or cost of services, or whatever you want to call it. Cost of revenue. And what that includes is all of the server costs. So they have to host their app and have a bunch of servers to store all the data and everything else. And so that's what that cost is. It's the cost to run their app, basically. And any support people are also included in that. Now, it doesn't include the salespeople and the rent or anything like that. It's just the cost to earn that money. So if we use the car example, we wouldn't include in the cost of goods sold the salary for the CEO. And we wouldn't include taxes and things like that. We'd only include the cost to produce that car. Well, same with technology companies and things like that. You only include the cost to produce that item. So let me go back to our PowerPoint. Now, when we net those two things together, when we take revenue and subtract out cost of goods sold, we get gross profit. And that's the definition of gross profit. It's just the difference between revenue and cost of goods sold. Now, what gross profit is going to tell us is how efficiently we are using the supplies to earn revenue. So in general, you want a very high gross profit, or what we call profit margin. So let's just say that you had revenue of $1 million in cost of goods sold, or cost of revenue, or whatever you want to call it, of $250,000. That means your gross profit is $750,000. Now later we are going to turn that into an actual metric, which is profit margin, but you want gross profit to be as high as possible. The higher that number is, that means the more efficient you are using your resources to generate revenue. If you earned $1 million last year in car sales, but it cost you $500,000 to make the car, and this year you earn the same amount of money, $1 million, but it only costs you $250,000 to produce that car, that means you are becoming more efficient with your resources.